ladies and gentlemen. We've got several important updates to unpack today, from new insurance registration figures to some subsidy changes that could shake up the EV market. And yes, we'll also talk a bit about the China-US trade tensions that are once again heating up. Some of this news is a little concerning, while other parts give us a clearer picture of where NIO and its sub-brands are currently standing. So, let's dive right in and break it all down step by step. This is not financial advice. Please do your own research. First up, let's talk about the insurance registration data from September 25th to October 5th, roughly a 10-day span. During this period, a total of 6,400 registrations were recorded across NIO's main brand and its sub-brands. Out of these, 2,100 were from the NIO brand itself, which, to be completely honest, isn't exactly an impressive number. The rest, however, came from ONVO and Firefly, two names that have been gaining a lot of traction lately. ONVO, for instance, registered around 3,200 vehicles, which is a strong showing. Breaking that down further, about 1,800 units came from the ONVO L90 and 1,500 from the ONVO L60. What's interesting here is that the L60 is performing just as well as the L90, showing that ONVO is successfully appealing to multiple price points within its lineup. This balance is key for building momentum in the mid-tier EV market. Then there's Firefly, which added another 1K units to the total count, rounding everything up to that 6,400 mark. In terms of ranking, NIO's combined sales placed it above Li Auto, but below Xpeng and Xiaomi, which highlights a mixed picture. Not bad, but not dominant either. Of course, these numbers were also affected by the national holiday period, which tends to disrupt sales cycles every year. And, historically, NIO seems to be more impacted by these vacation slowdowns than its competitors. So, while the week looked a bit underwhelming, it's likely a temporary dip. Looking ahead, the company really needs to ramp up, ideally reaching 10K or more deliveries per week to stay on track for its quarterly targets. That means October's second half will need to show some strong recovery. Now, as for the NIO brand's own registrations, 2,100 over 10 days, that's where things seem to be lagging. There are a few possible explanations for this. 1. Production capacity for some of the flagship models like the ES8 is already maxed out. The factory can only push out so many units until the expansion projects are completed. 2. Some potential buyers of the ES6 appear to be shifting toward the ES8, which has been generating more buzz recently thanks to its updated design and advanced features. That's good news in one sense, since it means the ES8 is in high demand. But it also means customers are facing long wait times, up to 6 months in some cases. And while strong demand sounds great, delayed deliveries can weigh down short-term performance numbers. So, NIO's challenge right now isn't just creating interest, it's converting that interest into timely, fulfilled deliveries. Now, let's move to the second major update, the subsidy changes announced for Shanghai, which will go into effect starting October 13th. This is a big deal because around 40% of NIO's total sales come from Shanghai and the surrounding Suzhou area. Shanghai, being China's financial hub, has always been one of NIO's strongest markets. Until now, buyers in Shanghai benefited from trade-in and scrappage subsidies that made EV purchases more appealing. But the local government is tightening those rules. Previously, if you met the eligibility criteria, you automatically qualified for the subsidy. Starting October 13th, however, buyers will need to enter a lottery system to qualify, meaning luck now plays a role in whether or not you get that financial benefit. And there's more. Previously, you could buy your car in Shanghai but register it in another city, and you'd still receive the subsidy. That's no longer the case. From now on, you'll need to register your car within Shanghai itself, which effectively limits access to local residents or those with official Shanghai registration status. This change will impact every EV maker, not just NIO, but also Tesla, Xpeng, BYD, and others operating in the region. Essentially, it raises the barrier for consumers to take advantage of existing benefits, which could temporarily slow down local EV demand. That said, some analysts think this might lead to a short-term rush in purchases. Since these subsidies are tightening and next year's tax rates are expected to rise, many customers might hurry to complete their orders before the year ends. So while this adjustment adds friction, it could actually boost fourth-quarter numbers if buyers act fast. For NIO, though, the near-term challenge will be to navigate these policy shifts while maintaining strong brand momentum. The company's Shanghai user base is loyal and affluent, so it's unlikely that demand will disappear entirely, but conversion rates could take a temporary hit. And now for the third and probably the most politically charged topic: the renewed trade war tension between China and the United States. This one's making headlines again, and for good reason. Recently, China has taken steps to reduce its dependence on U.S. technology, especially in areas like semiconductors. In parallel, it's also begun limiting exports of rare earth materials that are crucial for Western industries. These decisions have clearly unsettled global investors, and the ripple effects are being felt across tech and manufacturing sectors alike. In response, U.S. politicians, particularly Donald Trump, who's been vocal about economic pressure tactics, are threatening new tariffs and sanctions. But here's the key difference this time: the balance of power has shifted. From a ground-level perspective in China, public sentiment has turned highly patriotic and resilient. The general attitude is clear: if the U.S. tries to push China, China will push right back. There's no appetite to give in to American pressure. In fact, these sanctions may only accelerate China's push for self-reliance, especially in high-tech sectors where it wants to dominate. So ironically, the more the U.S. tightens restrictions, the faster China doubles down on its local innovation and independence. For EV makers like NIO, this could actually be an opportunity in disguise. A stronger domestic supply chain means less dependency on imported chips or components, something that would make the industry more resilient in the long run. As for Trump's tariff threats, history suggests they're often tough talk followed by negotiation. Many observers believe the U.S. can't afford a prolonged trade standoff because American industries rely heavily on Chinese manufacturing and materials. So eventually, some form of compromise is likely, but not without tension first. Overall, this situation adds another layer of complexity to an already uncertain global market. However, NIO and other Chinese automakers seem to be navigating this landscape with increasing confidence. So, to wrap things up, the last 10 days gave us a lot to process. Insurance registrations looked a bit underwhelming on the NIO side, but were strong for ONVO and Firefly, suggesting that NIO's broader strategy of brand diversification is paying off. The Shanghai subsidy changes might create a temporary headwind, but also a short-term buying rush before the new rules fully settle in. And on the trade war front, while geopolitical tensions are rising again, China's stance shows determination to become more independent, something that could actually strengthen its EV sector over time. NIO's short-term delivery numbers may fluctuate, but its long-term trajectory remains centered on adaptability, brand strength, and innovation. As we move through the next few weeks, hitting that 10K plus delivery goal will be the key indicator to watch. Thank you for joining us today. If you enjoyed the video, don't forget to hit the like button and subscribe to our channel for more stock predictions and market insights. Remember to turn on the notification bell so you never miss an update. Happy investing, and see you in the next video.